Hey, 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 got BA coming at you through the Gann Trade 6 channel. We're going to be looking at the NYSE composite here. In this video, what I wanted to do was give you the perspective on what's really going on with these cycles. When you look at the data, like what you're looking at now, you are seeing the cycles. The goal of this video is to give you the perspective on what's going on within this data, cycle-wise. And I really wish I had this when I started out, because I didn't really, I was 26 years ago, I didn't really have a foundation. I mean, I was focused on one cycle I had found about 20 some years ago or whatever, and I thought that that was the key to the universe. And it was a start like anything else, but it wasn't really the perspective. And so it's my goal in this video to give you the perspective I wish I had back in those days. See the bottom down here of this tasty move? That bottom is hit by all of the cycles I'm going to show you. Another unique characteristic of these cycles is that they all have their own price mechanics. However, they do have some what we'll call overlapping qualities between the different mechanics. And this is, if you're familiar with what like Gann clusters are, or that type of thing. That's actually real. It's not shown the way that it really occurs, but there are price clusters. I'll put it like that. And obviously, as you'll see here, there's definitely time clusters, but they don't work the way that most people think. This is our starter cycle. This is a very small, fast pivoting cycle. As you can see, it creates a lot of fluctuations in there of very short-term duration. Okay. This is a larger cycle in red. And as you can see here, up in this area, if you've ever been trading from a low to a high and you had some good indication on where that high was, let's say you knew it was going to be up in this area here, okay, and you started going up and then you started going sideways, this sideways area kind of gives you a feeling of, hey, what's going on? Are my calculations okay? Did I do okay? Or is there something I missed? But all it is this smaller cycle pivoting sideways. So it helps to know exactly where that smaller cycle is so you can anticipate these kind of moves. Because if you're not anticipating them, you're going to have to sweat through it. And then, of course, the pop up to where it's going up here. So as you can see with the red, it's a little bit larger of a cycle, and it gets in larger moves. It doesn't pivot as quickly as the greenish line. Next one is the yellow, which is an even larger cycle. And again, down here, as you can see, this bottom ties in with all three of these cycles so far. And this one, in a lot of places, like from here to here to here, mimics the red. But in other places, it breaks apart. As you can see, the red pivots high, low by itself, and then up to a high with the yellow line. So this gives you the perspective on how these cycles tie together. Because in a choppy area like this, look at this choppy area in here, and you have these cycles just going every which way. Well, in these well-defined areas, at this point, you have all of these going up at the same time. Now you can have them all going up, and it's a smaller move, but at least they're going up pretty much in sync. Final cycle is an even larger cycle. It catches the big moves. People have come to me over the years and they're like, BA, how do I get these larger cycles? Because I don't really want to trade the smaller stuff. And believe me, I understand, because I feel the same way about intraday. I'm not an intraday trader. And there's cycles, as you can see with the pinkish line, there's cycles there that catch those moves as well. Okay, and there's price points that tie up into these larger moves. That means they're you're able to predict them as well. All right, so it provides a really formidable background to see this and to know that this is how it works. This looks like a big cluster. It's like, what in the hell? Well, okay, it all depends on how you're trading, because if you're a small swing trader, you'd probably want to use the green with the red. If you're a larger trader of months, you definitely want to use the pinkish line. And by the way, there's larger cycles and there's smaller cycles. There's intraday cycles, which of course are not on here. Okay, so there's these different cycles. So it's, how do you want to trade? Like, as an example, you could use the yellow with the pink. You can see both yellow and pink go down here together. Provides a pretty good move. Whereas here, they both go up at the same time until yellow hits up here. Then the yellow pivots down and then up like that. So it just depends on how you want to trade. And in these areas, yeah. Jeez. You see what I'm saying? So this perspective is critical, because it's actually what's really going on in a financial market. GT6.